In today's video, I'm going to be going over Ripple to the dollar, or XRP. I'll tell you what my price prediction is for Ripple in the short term, in the long term, as well as the trade I have taken on Ripple myself, whether it's a short or long position. So whether you're already in a trade on Ripple, or you're looking for a trade on Ripple, or none of the above and you just want to learn some technical analysis, you're definitely in the right spot. Real quick before we get started, if you do like this content and want to see more similar content, do me a huge favor and click that subscribe button below. This helps me out a ton, and it also helps YouTube figure out which type of content you like. So if you like this type of video, it'll just help you find more similar content. But with that, let's actually jump in. If you've watched any of my previous videos, you know that I love to start off my videos with just some simple support and resistance lines on an empty chart like I have right here. I'm going to use this horizontal ray tool, and I'm on TradingView here. If you want to use TradingView, it's free to use. Just go to tradingview.com. You can create an account for free. It'll probably prompt you to pay, and I personally use the premium versions, but if you just want to do some simple stuff, feel free to use the free version. So with this horizontal ray tool, all I'm going to do is look for key areas in the chart that have resisted many times on the way to the upside, so levels we've gotten to and then had a huge pullback afterwards, or on the downside as we're falling, what levels or price numbers have actually held the price. So to do this, I simply just hover my mouse in some certain areas where it looks like that might be the case when I'm first eyeing it. Maybe some areas that had a huge rejection on the way up to the certain price levels, or supported the price levels on the way down. The first one I'm seeing starting from the left-hand side here, and there's probably a few down into here, but we're way higher than this price action right here. So I'm going to skip these low numbers in the 15 to 30 cents in here, because if we were to fall back down, then I could add those onto my chart, but I do want to keep it clean for now. So the first one I see close to our actual price action right now are these two wicks into here. And I'm going to put the line there, and I'll zoom in as well so you can see what I'm looking at. You can see that we came up into this area right here when we started running from about 70 cents to about $1.22. So more than a 50% run just in a couple days right here. And then we rejected at this wick right through here. And then I can see that it also rejected at the same spot on the way back up later into early 2018, right into here. So I'll adjust this line just a little bit so it catches both of those. And I can see that we also supported into this area as well. So now if I zoom back out, you can also see that this line, even though it took more than 2 years, actually more than 3 years for this pink line to be tested again, when we did finally come back to it in April of 2021 here, on the way down from a run to $2, we supported at this pink line for quite a while. We had quite a few daily candles that refused to break below it. We didn't end up breaking below and then strongly back above, and then once again we used it as support through the beginning of May right into here. And so far it's holding our price action pretty well. So those are the things I'm looking for on this zoomed out daily chart right here. I'm going to add a few more into my chart. So I definitely see one right through here where we resisted and supported all through this area, resisted through here, and then in this area as we were coming up, a little bit of resistance and supported on the way back down. So around 95 cents, definitely support and resistance. And then this one's a little bit trickier to see on the zoomed out version right here on a daily chart with all of the price action. However, I do see a key support and resistance right through here. And if I zoom in, you can probably see that a little bit more clear, where we definitely had some support holding us upwards here before we continued our push, some support here that wouldn't let us fall below, and then as we came back up and retested it, resistance right through here, and then of course in our live price action, we resisted it through here, even though there's a little bit of movement above and another resistance through here. And then I'm going to draw one more line just at our local highs right here, around $1.96. It isn't the most key support and resistance through this area, but it does have a little bit of resistance. It stopped our huge green candle on December 29th right here, around $1.96 before we tried to break above it and actually wicked super hard and closed below, and then some support and resistance through here as well. And of course, on our right-hand side, it is the resistance. It's the local highs for 2021 and the highs we've seen for the last 3 years. And then I'm going to draw one more support and resistance line into my chart, and it's this one right here. Resistance through this area, all throughout this area we had support and resistance, and then into here, resisted before we couldn't continue back up. Here, tried the same exact level again, failed. Here, same thing. Finally, we did break through in early April of 2021, so around 78 cents is another key resistance here. And then as I zoom into the left-hand side a little bit, I can see one more key area, and I think it's somewhere around right there, around $1.55, which supported our huge drop from $3.30 down to that $1.55, before we did get a small bounce upwards back into the low $2 and then fell through it, resisted it on the way back up again, and then of course in our current price action, it's obviously very significant as we're resisting it all throughout this area and where price is right now. So overall, I think that these 6 pink lines are very good support and resistance lines on your chart. And if you wanted to keep it simple, you could actually turn off the video right here, just have these 6 lines drawn onto your chart, and just simply trade the breakouts or the supports or the retests of these pink support and resistance lines. You can essentially expect that if price breaks through one of them, either to the upside or the downside, that we'll get to the next level afterwards. However, if I were to simply do that right now, I wouldn't be able to make a prediction of where I think Ripple is actually headed in the longer term. We don't really know if it's going to be this resistance that's broken for the next high to come in, or if we're going to lose this support right here for the next low to come in, simply by using these simple support and resistance lines. Instead, let's use some other techniques and tools to our advantage. So the next thing I'm going to dive into is something called Elliott Wave Theory. Now again, if you've seen some of my previous videos, you probably know a little bit or a lot about Elliott Wave Theory. If you don't yet know anything about it, I'll try to give you a brief introduction here, but just to highlight that I do have a 10-part playlist teaching Elliott Wave Theory. It's over 2.5 hours of content, so that can give you an idea of actually how complex this theory actually is. However, in my opinion, it's the absolute best way to predict long-term movement in the market, and it's what I personally use every single day. So here's a quick introduction. Elliott Wave Theory essentially states that the market trends in these waves of 5, where we have this 5-wave move that goes upwards. 2 of those waves are actually in the downwards direction, but the overall direction of this 1, 2, 3, 4, 5 is upwards. And then once we get this 5-wave move in our upwards direction, we then get a 3-wave move in our downwards direction. And again, one of these waves, the B wave, is actually counter trend and goes upwards just like the 5-wave move overall did. However, in general, this 3-wave ABC goes downwards and retraces some of this 5-wave move upwards. Now, once we get this pattern, which is 8 waves, 1, 2, 3, 4, 5, and then 3 down for 8 total, this essentially just repeats itself over and over again. Now, of course, as I said, it's a bit more complex than that. There are tons of different rules and guidelines that you actually have to follow, but that's the general idea, is that we get these 8 wave structures that will just continue over and over in the market. The only other thing to note is that because these 8 wave moves are continuing over and over, all that it's doing is forming waves on top of waves. So whereas we have this 8-wave move right here, once that completes, that's actually just another 1, 2. And then the next 3rd wave starts in 4, 5, and it continues upwards just like that. So every 8-wave structure is making up a 1, 2, or a 3, 4, for example. So let's get back to our chart on this. You could start an Elliott wave count from the very beginning of time on Ripple right here and try and get a count through this price action and then all of this corrective move into here. However, I really don't think there's actually a huge point in it. At this point in time, we know that Ripple had a bottom in March 2020 right through here. So let's just start at that bottom and try and adapt our count off of that. We know that from this low, we're looking for another 5-wave move upwards. So I think the first wave is actually pretty clear. We have a 5-wave structure right into here, and then right after it we get a huge pullback, an ABC that looks something like this. And as I told you, once we get a 5-wave move up, a 3-wave move down, it essentially just makes up a 1, 2 on a larger degree, and now we're looking for the 3, 4, 5. I'm going to change the color of this and turn the degree up so that we can distinguish between them, because as I said, that first white 5-wave move and the white ABC that we drew are simply making up the 1 wave and the 2 wave on a larger degree, respectively. So it looks something like this, where we have a 1, 2, and now we're trying to figure out where are the blue 3, 4, and 5. In Elliott Wave Theory, the 3rd is typically the strongest wave, and it's usually extremely bullish looking. So just by eyeballing this chart, I think the 3rd wave is actually pretty clear. We had an extreme move up here from about 19 cents all the way up close to $2 here. And as we got into early April, XRP pretty much just went vertical. This is exactly how a third wave should look on a macro level here. So I think we can pretty clearly label this top right here as the blue third. We're working on the blue fourth wave right now, and then we'd be looking for that blue fifth wave to put in new highs relative to that third afterwards. So it would look something like this with the wave turned on. I'll turn it back off just to keep my chart clean. I'm also going to delete these lower degree waves because I think it validates pretty well already. So now there are a couple different things we actually want to do to validate that our 1, 2, 3 is allowed so far, that we're not breaking any rules. The first one we're going to do is use a Fibonacci retracement on the 1 right here for the 2. Now typically on a 1, 2, so the retracement of the 1, which is the 2 wave, we like to see it fall between this red line right here, which is the 0.5, and this yellow line, which is the 0.65. This essentially means that it's a 50%, 0.5 being 50%, to 65%, 0.65, retracement of the move. In other words, if we had a move that looked something like this, and then we came back down to the red line afterwards, so we click our Fibonacci retracement from the bottom here to the top here, and if we were to come back down to this red line, it would be a halfway pullback of this entire move right here. We'd lose half the value from the bottom to the top right here to get to this red line. So as I said, we're looking for this zone right here for the 2 wave to fall into when we get the 1 wave completed. Now, of course, it can be shallower than that 0.5, and it can be deeper than that 0.65. That's just our most likely zone. I'm going to put the Fibonacci retracement on this, so I'm going to click from our bottom down here to our top right here, and pull it sideways into here. And you can see that this is a very deep retracement. It's way past that 0.65. It's actually even a little bit past our 0.786, or a 78.6% retracement. So this is definitely not our ideal spot for a 2 to retrace into. However, off of a low that fell so far from over $3 down below 10 cents into here, and then we had a run up to 80 cents, it's not too crazy that we pulled back a significant amount of that. And also, as I showed before, the A, B, C inside of this 2 wave right here is extremely clear. So like I said, a 2 wave can be this deep. As long as it doesn't break below the start of the 1 wave right here, it's still valid. This does happen less than 10% of the time, but for now we need to roll with it because there's no other spot that we could label the 1, 2. And after all, it is valid. So let's move on to the third wave. For the third wave, I'm going to use the trend-based fib extension tool. This essentially measures the length of one move relative to another. So if we had price action that looked something like this, from up to here to there, and then we had some sort of pullback down to here, and then we had a move upwards again right to here. Let's use our trend-based fib extension tool. We're going to measure the length of this yellow arrow to this yellow arrow right to here. So we'll click at the bottom and the top of our first yellow arrow, and then we'll click at the bottom of our second yellow arrow. Now, if this second yellow arrow comes to this 1 right here, this pink line, it means that these 2 yellow arrows are actually equal in height. So we're measuring the relative length of this yellow arrow to this one. If this second yellow arrow came up to the 1.272 here, it would be 127.2% the length of the first yellow arrow here, or 1.272 times longer. So just to show you that that's actually what's happening here, I'm going to drag this first yellow arrow to the bottom of our second yellow arrow here, and you can see that it comes up to this same pink line right here, showing that these are both moving up vertically the same amount. With our third wave in Elliott Wave Theory, the 3 wave is most likely to come between this 1.618 and this 1.75, or 161.8 to 175% of the 1 wave, which is the first 2 clicks we would have. So we'd click at the bottom and the top of the 1, and then the start of the third wave, and if we come inside of this zone, that's the most likely spot. In a bullish market, our secondary target is this 2.618, and so on with the 3.618 and the 4.236 if the market is just too bullish. So let's measure that third wave. So we'll click at the start of our 1 wave down here, the top of our 1 wave up here, and the start of our third wave right here, and I'm going to pull it sideways, but you can see it's lined up with the start of our third wave. And look how perfect that actually is at the top there. Almost to the penny, we come to this 2.618 that we have on our Fibonacci level, which is the second most likely spot for the third wave to come, and the most likely spot when the market is extremely bullish. So this measures exactly perfectly, definitely not a coincidence, and now it helps validate that we do have this 1, 2, 3 in so far, and we're looking for this fourth wave to actually complete. So next up, let's put another Fibonacci retracement onto our chart. With a fourth wave, we're typically looking for it to fall between the 0.382 and the 0.5. That's the most likely spot for a fourth wave. So let's put that onto our chart. Let's click from the bottom to the top of our third wave right here and pull it sideways, and I'll delete the old one. And you can see that our fourth wave has actually fallen pretty far down already. We fell almost immediately down to the 0.5 and even wicked a little bit below it with a couple candles below it as well. So overall, it's a pretty deep looking 4 already. Now, one thing to know is that fourth waves in Elliott Wave Theory can actually be triangles and end up forming something like this. And when this happens, you actually measure the depth of the 4 wave relative to this Fibonacci retracement to where the triangle finishes. So if the triangle were to continue to play out, let's say we got price action that looks something like this and finished right into here, that would actually mean that our fourth wave ended right here, which is right between that 0.382 and that 0.5 that I said is the most likely spot. So even though we had this initial fall downwards, this is actually where we would be looking from to fit our high probability zone. The other thing we know with triangles is that throughout the whole triangle, volume is decreasing. And if we just look at volume on the bottom right here, you can see that our third wave peak is this area of volume right through here, and we're pretty much decreasing throughout all of the price action that we already have. In other words, the fact that we're so deep and now we're trending into this range of this first move down right here, kind of trending sideways, as well as decreasing volume, makes me believe that this is forming some sort of fourth wave triangle. I'll get rid of the Fibonacci retracement for now just to clean up my chart, and I'll show you what this triangle might end up looking like. Triangles in Elliott Wave Theory are 5 waves. So the initial wave down right here is an A wave. We probably have a B wave that's already been put in up to here. And now we're likely working on the C, the D, and the E. It might end up looking something like this inside of the triangle. Now once that E is in, that would mark the bottom of our 4, and then we'd be heading upwards towards the 5th, that blue 5 wave. Now for now, I'm actually going to turn this wave back off to keep my chart clean, and I'm also going to delete this bottom trend line right now because we don't know where that C wave is going to fall. It could be all the way up here and we already have the C, or maybe it comes way longer in time and we get the C down to here, or even lower into here. As of now, there's really no way for us to know where that C is going to fall. However, this is definitely my current prediction on Ripple to the dollar. I think we're going to trend sideways for a little bit longer in here to finish our fourth wave, and then we'll head up to put in all-time highs at that fifth wave right here. Now, if price were to continue upwards from right here and just continue higher than this B wave into here and continue up and up, then I would have to redefine my count and say that the fourth wave is just this first move down right here, and then we're actually already working on the fifth wave with a 1, 2, and the 3 would have to start very soon onto this. But for now, I believe this is the highest probability because this as the fourth wave would be extremely deep and extremely short in time. It's less than 10 days from the top up here to the bottom into here, whereas look how long our third wave actually took. It's from December of 2020, the end of December, to the beginning of April. So it's about 3.5 months into here for our third wave, and so the 10 days for the fourth wave doesn't really make too much sense symmetrically. It would make a lot more sense for this fourth wave to extend into June or maybe even into July to finish this triangle right through here. So now let's actually move forward. Let's assume that I'm right about this triangle. We'll form some sort of ABCD into here over the next month or so, and then Ripple will go ahead and put in all-time highs. Let's figure out where that fifth wave is actually going to land. So for now, because we have this awesome support and resistance line right through here that potentially could be where our E finishes, I'm going to use this as my prediction right now. Around $1.22 on Ripple is where the triangle will end up finishing, maybe in late June here, until we push upwards. One of the ways to predict out the fifth wave is to measure the length of the 1 relative to the length of the 5. They're often equal in value, or 100% the length of each other. So let's go back to our trend-based Fib extension tool, click at the bottom and the top of our 1 to grab the length of our 1, and click at the bottom of where we think our fourth wave might fall. And let's pull that sideways. Now, as I said, the 1.0 is a very common spot for the 5 wave to fall. However, it's not common for the 5 to be short of the 3, and that's where it would be if it fell at this 1.0. So some of the next targets on the 5-wave are between this 1.272 and 1.414, and I'll draw a small box into there as a potential spot for our 5th wave to fall, as well as between the 1.618 and 1.75. So I'll draw one more small box into there. The other thing we can do is use a trend-based Fib extension tool from the bottom of our 1 to the top of our 3 and pull that to the start of our 4, and the 0.618, the length of the 0 through 3, is another key spot we can look for that 5th wave. And so if I do that, click at the bottom of the 1, top of the 3, and then the bottom of our 4 right through here, the 0.618 or 61.8% of this entire move extended onto here falls into our second box up there. So that helps add a little bit of confidence up through there. The very last thing I'll do is go back to one of our Fibonacci retracements that we had on the chart, and that's the pull from the bottom to the top of our 3rd wave right here, and I'll pull it sideways. Now, one thing I like to use is the negative values on the Fibonacci retracement. So we know that from the top here downwards toward this 0.236 is a 23.6% retracement of this move right here. We would lose 23.6% of this entire move to get back down to this 236. It's essentially the same exact thing with the negative values on the other side, but just flipped. So whereas this is 0.236 downwards, this would be a negative move of this exact same amount. So if I took this yellow arrow and just flipped it on top of the Fibonacci retracement here, you can see it's the exact same length. This negative 0.236 is one of my very first targets to the upside when using Fibonacci retracements to measure depth. So if the 4 does come nicely onto the Fibonacci retracement here and then start heading upwards, I would first be targeting this negative 0.236. And once again, it actually falls right inside of this previous box that we had drawn, right up here between $2.32 and $2.42. So we have 3 spots of confluence into that top box. I'm actually going to delete the bottom box off of my chart. Let's move this Fibonacci retracement off to clean it up. And this is my official prediction of where Ripple will actually head. So in conclusion, I believe that Ripple is going to trend sideways maybe for another month or so into this triangle, where we'll finish out a couple more waves into here. I think the triangle could finish around $1.22 as it's a key support and resistance level, and then we should head upwards to finish the final move on Ripple, getting us to upwards of $2.40. So if this triangle does play out and you can get an entry around $1.22, you can basically double your money on this final move right through here. And now with the wave on, this is essentially what I'm looking for price to do. Trend sideways and then push upwards. Now remember that it's not going to be a straight push upwards towards this box. We'll likely have some sort of pullbacks at each of these key support and resistance lines. So as we come up to this first one, maybe we get a small pullback like that. Up to the next one, another small pullback like that, up to the next one, another small pullback, and finally end up inside of our box here. So now to tell you about the trade that I actually took on Ripple already. Now if you've watched my previous videos, you know I'm extremely bullish on Ethereum long term, and so my crypto portfolio is actually based in Ethereum. Every trade I take, I have the goal of gaining more Ethereum, and I don't really care about the US dollar price of Ethereum in the short term, because in the long term, I have targets that are much, much higher. So my only goal in crypto is to accumulate more Ethereum. For that reason, I trade the Ethereum pair of Ripple, or XRP ETH. So let's open that on Binance right through here. And you can see that this chart actually looks super bullish already. We had this downtrend that started in the middle of April right through here with this strong trend line that got rejected multiple times as it tried to break through. And finally, just yesterday, we had this daily candle on May 15th that broke strongly through this downtrend and closed above it. So personally, I've already taken a trade on XRP ETH. Now, since I believe that Ripple to the dollar, or the US dollar value of Ripple, is going to trade sideways, the only way for this to go up with Ripple trading sideways is if Ethereum's price goes downwards. So in the short term, maybe this means that Ethereum's price will go downwards, Ripple's price will trade sideways, and eventually I do believe that Ripple's dollar price will rocket upwards as well, as I was showing you earlier. And so this pair and this trade should go upwards pretty strongly from here. The risk to reward on the trade I've already taken is close to 6-1 right here, where I have a stop loss below the few candles that we have into here, around 32,600 on Ethereum, and I'm targeting back towards our April highs as my very first target into here, but I don't think it's unreasonable that this pair trades even higher afterwards. And as a sneak peek into this, I think Ripple is just following suit of what Cardano has already started to do over the last few days. You can see it has a very similar downtrend, a very similar strong breakout of the downtrend, and now it's just pushing upwards very strongly from here. So that's my final prediction, but what are your thoughts on Ripple or XRP? Are you personally long or looking for a trade in it, or do you think it's going to go downwards? Finally, if you like this video and want to see more similar content, once again, do me a huge favor, please, and click that subscribe and like buttons below. I really appreciate all of your support, and this helps me understand which videos you like so I can continue to create similar content to them. All of the content on my channel will help you become a better day trader, so if you're interested in that, why not click that subscribe button? It's completely free. With all that being said, thank you so much for watching, and as always, good luck trading.